The Indian banking sector has long been a pillar of the nation's economy, driving financial inclusion, credit growth, and digital innovation. Despite its remarkable achievements, a troubling undercurrent of distress and sadness has emerged among Indian bankers. Recent reports highlight a pervasive issue of high stress, burnout, and even tragic outcomes like suicides, all fueled by intense work pressures, systemic problems, and societal perceptions. A 2024 report, for instance, revealed that almost 500 bank employees in India have died by suicide over the past decade due to work-related stress. This widespread dissatisfaction is a complex issue with multiple contributing factors. High work pressure and unrealistic targets. One of the most significant reasons for sadness is the intense pressure to meet ambitious performance targets. Fueled by a nationwide credit boom, banks are expanding rapidly, but this growth comes at a steep cost to employees. Bankers, particularly those in junior roles, face aggressive goals for mobilizing deposits, dispersing loans, and cross-selling products like insurance. Failure to meet these targets can lead to reprimands, public shaming, or stalled career progression. This relentless pressure often leads to employees working long hours, resulting in minimal work-life balance and high levels of exhaustion. A study in Kollam, Kerala, found that longer work duration significantly increased burnout and stress, with female employees reporting even higher levels of exhaustion. The relentless push to perform has been linked to severe mental health issues, with some bankers leaving suicide notes that cite abuse from senior staff and systemic disempowerment. High attrition and lack of career growth. The Indian banking sector grapples with one of the world's highest attrition rates, especially among junior bankers, with rates at some major private lenders regularly exceeding 50%. This high turnover is both a symptom and a cause of dissatisfaction. Junior employees often report sparse training and limited opportunities for career advancement. While senior bankers can earn salaries comparable to their counterparts in Hong Kong or Singapore, junior-level pay remains low, contributing to a widening income gap. Many employees feel trapped in roles with little scope for skill development or promotion. Furthermore, entrenched hierarchies, sometimes based on gender, caste, or language proficiency, create an invisible ceiling for employees from marginalized backgrounds. For many, quitting is the only viable path to career advancement or an escape from a toxic work environment. Systemic issues and non-performing assets, NPAs. The persistent problem of non-performing assets, NPAs, has created a challenging and fear-filled environment for bankers. Despite government efforts to recapitalize public sector banks, the pressure to manage bad loans remains intense. Bankers often face scrutiny and fear of criminalization for loan defaults, even when their decisions were made in good faith. The threat of audits, investigations, and regulatory penalties creates a culture of apprehension and low morale. In some cases, such as the IndusInd Bank accounting discrepancy in 2024, systemic issues and inadequate oversight in private banks have led to a breakdown of trust and increased pressure on employees to navigate complex and risky financial environments. Cyber threats and digital fatigue. The rapid digital transformation of the banking sector, while a success story for the industry, has introduced new stresses for employees. The shift to digital banking has led to a surge in cyber threats, and bankers are now tasked with ensuring secure transactions while constantly adopting new technologies. This constant need to adapt, coupled with the fear of major data breaches, creates a phenomenon known as digital fatigue. This is particularly challenging for older bankers or those in rural branches with limited technological infrastructure, adding to their mental load. Societal perceptions and lack of empathy. Bankers often face a profound lack of public sympathy, which further exacerbates their emotional distress. Many people perceive bankers as pampered employees working in air-conditioned offices with high salaries, a stereotype that ignores the harsh reality of their jobs. For example, a Reddit post from a public sector bank employee detailed the struggles of working in rural branches with minimal facilities, where they are also burdened with implementing government schemes in addition to corporate targets. This lack of understanding from the public, combined with pressure from customers and frequent verbal abuse, fuels a sense of isolation and burnout. The impact of mental health and burnout. The mental toll on Indian bankers has been quantified in studies. The 2024 Column study found that over 70% of bank employees experience moderate to severe stress, with long working hours as a primary factor. The study revealed high levels of exhaustion and disengagement. These pressures have led to a severe crisis, highlighted by the tragic statistic of 500 suicides over the last decade. Many banks lack robust mental health support systems, and the societal stigma around mental health discourages employees from seeking help. To address this crisis, a multi-pronged approach is necessary. Banks must implement workplace reforms by setting realistic targets, offering mental health support, and promoting work-life balance. Regulatory and governance improvements are also needed to protect bankers from undue blame for loan defaults and to strengthen ethical standards. Investing in career development through training and clear promotion pathways is crucial for retaining talent. Public campaigns to highlight the challenges bankers face can help foster empathy, while the establishment of confidential helplines and support groups can provide critical suicide prevention resources. Ultimately, addressing the well-being of Indian bankers is not just a matter of social responsibility but is essential for the long-term stability and reputation of the entire banking sector.